Friday.
Right.
What sort of volatility will that create for the stock, do you think?
I don't know. I mean, it's really interesting. It's very, very simple economics. You have a lot of buyers in the beginning. The company was a little smarter than Facebook. They controlled the offering much better, as you know. But what happens when all those people who bought start to sell? Well, the next person in the food chain is the retail investors, right? The music is going to stop, and people are going to scramble for the chairs. So I'm really concerned about that stock long run. That's my big issue, long run, you know. Because when you buy that high, you know, you can't keep doubling sales forever, you know.
Would you feel better if the company were turning a profit? Would that justify the numbers that we're seeing now, or are they still too high?
Way too high. I mean, you know, you're talking about 5, 10, 20 times the value or the relative value of other wonderful companies. Remember, when Microsoft went public, they had a 38% net profit margin. For every dollar they sold, they were earning 38 cents. Incredible, right? So it would help a little bit if they were profitable, but really, even looking at sales in any normal comparison, the value is just sky high, in my view.
So we should point out, as a living, you value private companies. You look at companies that are not publicly traded and you put price tags on them because that data is hard to find.
Right.
Have you seen anything that compares to Twitter in the private space?
No, it's an amazing thing. It's really interesting. It's a great question. We are in a very typical situation. We've got a bull market. Everyone's smart in a bull market, right? We all are. Even I am, right? We're all smart in a bull market. But the fact is, where does that value come from? And what happens if there's a little bit, like in 2000, you remember this, you know, we were there. The market starts going like this a little bit. What happens to those tech stocks that were overvalued? We know they go way down. So don't be the last in line to buy the stock, is my view. I mean, I'm not saying it's a bad company, but it's really the value. Where did that come from? And by the way, one thing, we did some projection stuff because you can't live in the past, I understand that. But for this company to be valued at that rate, they're going to have to continue extraordinary growth. They're only 7 years old, by the way. All startups grow fast, and they have to turn a profit. So I just don't see it.
Where should this stock trade based on your numbers? It's got to be a lot less than what we're seeing now.
Yeah,
so
a lot less.
Throw a number out there. Are we talking single digits,
I'm gonna what's the thing? I'm gonna punt on the question. Yeah, exactly right. I'm gonna pass on that question. But I even think they were high at 26, so that shows you where, even when they were going out, I mean, I just couldn't see it, you know. And again, you look for comps. What are the other companies doing? I mean, Google didn't have a future. Google was profitable, right? They were only 15 times sales. So where does that value come from? We have a classic situation here. We really do, where there's a bull market. The price of the stock is too high, in my view. Okay, and if we continue to have a bull market, maybe people will do well, but boy, you're on the upside on the risk, in my view.